everybody. It's Monday now, it's the new week, so let's get started on this week's forecast. So first of all, gonna break over DXY. So what's happening with DXY? We've broken out this wedge after it tapped the level that we've been forecasting to react from. It closed back inside the pattern, breaking new lows. What's happened next is that price consolidated for a while, formed a bit of a pullback, took at the lows that we've been anticipating for a while. If you guys recall, there was equal lows, expecting a stop hunt of these equal lows, which we did get, followed by the rally, tapped the liquidity level, and now price is consolidating to the downtrend. So what's happening now? There's been an extension of this larger pattern that's in play. Now what's followed is an expanding formation. So price is expanding, so a few things can happen. So first of all, we could get a rejection of this trend line to go and retest previous levels that we can mark out here, and then a continuation to the downside. So that's one scenario on the DXY. Second scenario is that price completely just drops and retest to the main target. So the reason this would be an ideal scenario is simply because we need to take out these highs and tap some form of liquidity and a confluence with a third tap of the trend line. So I'm anticipating actually a rally from this level. So if we delete this now, since it's irrelevant, we can now have the equal highs, as you can see. Doesn't have to be exact, but you get the idea. So we've got some equal highs, we've got the formation pattern forming. So now we need to prepare for a potential buy. So if we go on the 1 hour time frame, what's happening? You know, we can see a few things. So right now, the current structure, there's a few phases going on. So we've got momentum here. Momentum followed by a correction. Continuation, we've also got momentum. What's going to happen after momentum? There's likely to be a correction, and we've got the correction. We've got a nice compressed flag, a bit of a stop hunt from here, tap a level of supply, and now it's taking both the highs and now the lows. So now there's continuation. But notice what's happened on the breakout of this pattern. So if you notice that previously after a momentum move, so you've got impulse, correction, impulse. With this move now, we've got impulse, correction, and the impulse is a little bit weak. You can see there's wicks in the candles. The sellers ain't looking too convincing. So this is a weak bearish breakout. So that's already identifying that, you know, the price is unlikely to continue with momentum. So the fact that the breakout was really weak and there's wicks on both sides and the sellers are getting smaller, the candlesticks are getting smaller, is indicating that price could potentially reverse. So what have we got? Yes, we have a potential double bottom here. We now have a rejection. So again, we're using the same schematics and the same principles that we've been following over and over again. So I'm expecting a few things. So we could either reverse from here. It's unlikely for price to reverse from the double bottom without having some sort of a stop hunt, you know. So if we can have some sort of a stop hunt, which should be in confluence with not only these equal lows here, but also in confluence with this trend line. So this would be ideal if we get a stop hunt of the larger structure pattern. If we just tidy this up, and we update it actually. So more or less a stop hunt down here. We've got equal lows here, but then we've got a nice demand level right there. So this would be ideal. So some sort of a reaction from this level here would be ideal. So we've got one tap here, two taps, and a third tap that's in confluence with the previous demand level that made new highs, is in confluence with the third tap of the expanding pattern. So although this is the main target, the previous low on the start of this move, I do see a buy setup on DXY. If we go back to the 4 hour time frame, And we can see a nice scoop of a double bottom, definitely a stop hunt pending. So I'm expecting a rally from this level where we could get price. All right, let me just fix this again. We could get price, take out previous highs. So again, one tap. Let me do that one more time. So again, one tap from here. So 1, 2, 3. That's one confluence. Third tap of the outer structure. Second confluence is a stop hunt of this double bottom. And the third confluence is that this level is in confluence of a strong demand level that has not been tested. Can you see the spike here? We've got the demand level. It rallied with momentum. It failed to pull back. Again, it rallied and it failed to pull back to this level of interest. So now prices rallied for a long time, for a few days or weeks, and now finally it's pulling back to a point of interest. So I'm definitely expecting some sort of a reversal from this level where we could look to take out these highs and potentially even these highs. So this will be a target back up to the trend line and a stop hunt of this double top. I'll also be conscious about some sort of a reaction from this level, just in case price does depreciate from now. So I will have an alert. So add alert. And that's it, just have an alert on DXY. So that's the DXY. I'm expecting a rally very, very soon. So if we look at the current pairs, what have we got? We look at oil real quick. So what's interesting with oil? Oil, we forecasted the same thing. We've got a double bottom stop hunt. So look, it's the same pattern. You can see the same schematics on different currency pairs, even oil and gold. So again, we've got a third tap of the outer structure. Will be clearer on the 1 hour actually. It's the same schematic. So again, we've got one tap, two tap, and a third tap. We've got a double bottom. Let me tidy it up. Double bottom. So that's one confluence, a stop hunt of the double bottom, second confluence. And then what have we got? A rejection of a demand level. So the same thing is happening on the DXY, is happening on oil. This is what happened in oil, sorry. That's what that setup is, of high probability. So if we look at oil, when the setup came, it rallied, took at the highs, and then we had a level here that it got marked to the T. We've been forecasting for this for a while. These levels are not, I don't just put them there. We forecasted it in advance, and we can see here, we've got the level here. It broke with momentum and it failed to retest. So now, this is a setup for oil. Right now it's pulling back on oil. It's made a new low, so potentially a reversal from somewhere around here. I'm also prepared for a potential further incline to then take out these highs and then go short. So that's oil, which is perfect for dollar CAD. So with dollar CAD, what have we got for dollar CAD? Okay, let's zoom up to the daily time frame on dollar CAD. Again, we're expecting rallies on dollar CAD. So dollar CAD, keep it really simple. Big expansion pattern, lots of consolidation. We're expecting reversal. Why are we expecting a reversal? We go to the 4-hour time frame now. We can see that price is at a current double bottom. So we can expect a few things. Either a tap of a demand level here where we could get a rally towards at least the minimum of this trend line, but really we want further incline to the outer structure. But again, we don't want to be fixated on just the outer structure as the main income, because obviously price could easily reverse from this trend line that we've got here and then drop. And then what happens if it drops? This happens. So let's say price does, play out to our forecast, and we, instead of having to take profit at the main structure or even up here, we can be prepared if price action tells us that it could just drop from here and continue the larger pattern as in play with this trend line and then go long. So we need to be prepared for multiple scenarios. But for now, I'm expecting a rally from either this level here or this outer structure level here. Because we've got a small compression and we've only got one tap, two tap of this outer structure, a third tap is highly probable. So you can already forecast that this channel will get breached out to the upside. So a strong rally to break out this compression towards at least this outer structure is highly probable. But first of all, let's be prepared for what could happen. Price could go before, so price could go from here, or it could even go from the outer structure of this larger pattern. So there's multiple scenarios. So once you've identified the scenarios, you can then look further and go to the 1 hour time frame. So we go to the 1 hour time frame. What does price action tell us? So okay, we've marked out probable scenarios. We've got, probability 1, 2 and 3. Just way into the market gives you some clear direction. So for now, what can we see? We can see that price has broken momentum. It's then consolidated. But what's happened is that price breached this trend line that you can see here with momentum, and it broke up from the previous high. And now price is consolidating and slowly dropping to potentially tap this level of liquidity to then go long. But again, we're forecasting multiple scenarios. So this would be plan A, plan C would be the outer structure, plan D the further structure. So dollar CAD, I just need to wait for further confirmation. What would I be looking for? I need to be seeing something like this. If we get small compression towards my level of interest, then I'll definitely be looking at the smaller time frames where I'll be looking to get involved for a reversal from this level, which is in confluence with this low here. The reason this low is important is because there's going to be many stops there. This was the previous low that breached these previous highs. So this low rallied with momentum, makes it the most valid low. So once this low gets taken out and taps this level of liquidity, I'll be looking to get involved. So that'll be one option on dollar CAD for a long. Obviously, I'm prepared that this schematic can go even further down towards this outer structure, or this outer structure down here, or even further to this outer structure here. So again, I need to be prepared for whatever the market throws at me. So that's dollar CAD. So it really depends on what price is telling me. So that's dollar CAD. Next on the list is Euro JPY. Okay, so Euro JPY is a pair that I've been forecasting, and I got a stop hit, which is fine. I do take losses. So just to break it down for you guys, we had the rejection of this trend line. We had the compression, which is extremely important, because what happened, which is this price is just squeezing. Whenever you see squeeze, you know there's going to be a break to the downside. Vice versa, if you see squeeze on the opposite side, you know there will be a rally to the upside. So just a simple schematics to take into consideration, such as this. We've got the squeeze to the downside, compression to the downside, momentum to the upside, compression to the downside, momentum to the upside. Here, compression to the downside, momentum to the downside. What happened next? We've got momentum, and then we've got the correction. The correction was upwards. So momentum, compression to the upside. I was expecting a sell, but I got stopped out, which is fine. And I'm targeting these lows down here. So let's break it down one more time. We go to the 1 hour time frame. The 1 hour time frame, I had a level just above this double top. Nice tight stop level. There was no reason for it to take it out on a stop loss, because since I went to the smaller time frames on the 15-minute and the 1 minute, and obviously that failed, which is fine, because when I get stopped out, there's always a second opportunity. So the schematics behind it was this. My entry was based on this larger compression, such as this. So the thought process behind it was, number one, we had equal highs. Number two, we had equal highs here. And the reason I like this one is because this was a supply level. Now, I know that the fact that there's a supply level just above, these traders here need to be stopped out for liquidity to come into action. So I set my order at the top of structure, around like this, and obviously price took me out, which is fine. The reason I don't really mind getting stopped out is because, you know, when I do get it right, I can make up for a lot of losses because I have really decent risk rewards. But that's fine. I got taken out on my plan A, but my plan B would look something like this. If I get stopped out, it's fine. I'll look for momentum back inside, look for some small compression, and then catch a stop hunt off some equal highs and then get involved on the larger trade. Now, if that doesn't come into fruition, it's fine. I'll look for some sort of structure. I'll ignore everything until I get some form of a low that breaches. Once the low breaches, then I'll look for a pullback and I'll catch the same trade, but on this schematic there. So it's fine if I get stopped out. So what am I looking for now on Euro Yen? We go to the 4-hour time frame, to the current price. Okay, the levels have been tapped. We've had 2 stop hunts, and this is very important to me. The fact that this low here got taken out is perfect, because we've got this schematic. We've got the rally, the new low, the stop hunt, which tapped another level, and now we have a break of structure. So what's going to happen next to the break of structure? I'm looking to catch the pullback. So on a smaller time frame, I'll be looking for some form of compression. Wait for either some equal highs. Once I get some equal highs, such as these two here, then I'll look for a stop hunt, look to my left for further confirmation on the smaller time frame, and then I'll be looking to get involved on a long-term position. Now, that's one scenario. Second scenario will be the same. Momentum, compression, wait for a stop hunt, catch the pullback, continuation. So the same pattern that I'm identifying here, this same schematic here, as you can see, rally, pullback, stop hunt, but this is the most important information. A stop hunt of the new low, so a new low and a complex correction, look for a stop hunt of a double top, and then catch, get involved in the next trade. But I'll be looking for the same schematic on a smaller time frame, most preferably on the 1 hour to the 15 minutes. So this is what I'll be looking at. So something like this. If I can get this form of schematic, but on the smaller time frame, then I definitely will be looking to get involved somewhere here. So I'm just being patient. We've taken out the lows. Even though I missed out, I got stopped here. Around here, it's fine. There's always more opportunities. So this is Euro Yen. I'll definitely be looking to get involved in this trade very, very soon. Long-term targets. Pull back to this level. I'll be monitoring price at the trend line. If I see bullish reversal signals, then I'll close most of the position. If not, this is my take profit 1, where I'm looking to bank 80% of my position. Then I can hold this trade to the main target. So me personally, personality is I can't really hold trades long term because I'm not that patient. What I am good at is taking profit at take profit 1. Hence why I take profit at this level here, most likely banking 80% of my positions with a pretty decent risk reward. So take profit 1 will be this level, take profit 2 further to the downside. But again, we need more confirmation. So this is Euro JPY. Next on the list is Euro New Zealand. Euro New Zealand was a good trade. I was really expecting a long from this level, since we had multiple confluences. We had 1 tap, 2 tap, and a 3rd tap of this outer structure. We also had 1 tap, 2 tap, and a 3rd tap of this outer structure, and also 1 tap, 2 tap, and a 3rd tap from this outer structure. So this is what you can call the 3 aces, or just 3 trend line X's or just multiple confluences, especially with some levels around here. So this was looking like a good trade for a buy. However, once price rallied and I spotted a level here, I set my order just a little bit above, looked on the smaller time frames for the I had a take profit here. Take profit 1 was banked just below these equal lows, just in the event that it just rallies. So I banked 80% of my position. 20% was left running and it took me out. And I decided not to enter a buy limit order because the momentum was a little bit too much coming until a Friday, and I don't really take trades on a Friday. So the long that I was expecting, I didn't take it, which is fine. I would have been taken out. So this was Euro New Zealand, was a pretty good trade. Originally my plan was actually the buy, but I saw a good sell setup and I took it. And if I know that price is going to come back to retest these levels, I might as well sell it if I see the right criteria meet. So that's Euro New Zealand, a 9-hour trade, which compensates with the recent Euro Yen trade. Next on the list is GBP USD. So before we go over cable and obviously pound yen, just look at the forecast real quick. So just by reading it, I read it earlier, and there was just one line that just stuck by me, which was this one here. Rising US Treasury yields may put a temporary cap on a parabolic climb for the pound. That's the snippet I'm taking from this fundamentals. This is telling me that yes, it's parabolic, yes, it's bullish, but be careful, there could be a reversal coming on the pounds because of the US Treasury yields that are rising. So that's the information I took, and I can implement it into the technicals. So with cable, it's really just extending and extending and extending, which is even better because again, we've got a double top stop hunt, compression to the upside, and then a further compression on the smaller time frames. So this is do a drop. We have 1 tap, 2 tap, and a 3rd tap. We've got the rejection. Price then didn't pull back to this level, but why is that? You know, why didn't price from here, you know, drop towards the outer structure of this pattern here? You know, based off a 3rd tap, price was likely to come down here, right? Simply just by counting this 1 tap, 2 tap, 3 tap, and it didn't. Why is that? The reason for that is, how did price approach this level? There's a lot of compression. What happens after compression? It rallies to the upside. So this compression here was telling me that it's very unlikely for price to continue with this slow momentum back down to the main target of the outer structure, especially when 1.4 has been hit. And that's exactly what happened, and now it's been hit, and now it's formed a pattern within a pattern. So first of all, we've got an expanding running channel, a large one. It then formed an extension of that pattern, and then there's a pattern within the pattern. So now we have price is now tightening even more. Where else could it go? You know, price is really getting trapped. So what this is telling me is that price has taken out 1.4. So what's happening after 1.4? Market psychology is telling me that price is actually rallying. So many traders will be buying the market. And then what happens when they buy the market? Stop losses will be placed below 1.4. Most of them will get stopped out. And then what happened on the other scenario? When price rallied above 1.4, it then trapped traders, and then price closed right below. So this candle here, you can always see market psychology and emotions in the actual charts. Candlesticks tell you everything. So if we just look at this piece of information, we can remove this trend line. This piece of information is enough. So number one, buyers got stopped. After you see the strong bearish candle, you're expecting price is likely to drop now. It's done a fake after 1.4. with a stop loss this high here if you're extra, this high here if you're extra, this high here if you're extra conservative. Long-term targets, cool. Back down to the previous low, you've got yourself a good trade there. However, that wasn't the case, since price now stopped out the sellers. So it stopped out buyers and the sellers. This is why you need to wait until manipulation is over and wait for the equal highs and the equal lows to get involved. So this is GBP USD. I'm still expecting a decline, but I need further confirmation. What exactly am I waiting for? Is a rejection of this level. How is price approaching my outer structure? Is it approaching it in a corrective manner? In a momentum manner? That looks pretty momentum, even though there's the candlesticks of the buyers are pretty weak since there's wicks. But what I don't like about it is there's not really many sellers, such as this. There's buyers and sellers, and there's a compression structure. We don't have that here to the upside, so this is pretty bullish. So instead of me setting a buy limit order, I'm gonna wait until we get some further confirmation, such as a rejection of the outer structure, wait for the sellers to get involved, wait for some commitment and catch either the first flag or a break of structure and catch the retest. So there's going to be many opportunities to get involved with GBP USD. Again, I just need further information. That could be one scenario. For me to enter it high and try and catch a knife, I would never catch a knife. But the only scenario where I'll be looking to get involved is if we get some sort of a reaction, if we get a double top or some equal highs, then I'll be perfect, because I'll be looking for a stop hunt, most likely in confluence with some outer structure. Then I'll be looking to get involved. So for now, I'm staying put on GBP USD until we get further confirmation. It looks a little bit too bullish, but like the fundamental said earlier, you need to be careful, and I will. So until we get the sellers, some commitment from the sellers, wait for a bearish pattern or compression, then I'll be looking to get involved to at least the outer structure of the pattern. So this is GBP USD. Next on the list is pound yen. Pound yen is looking interesting. If we zoom out onto the daily time frame, we now have a tap of this outer structure, I think. Actually, no, it's not there yet. What I do like about it is we have this significant high. There's been a big drop, consolidation, momentum, complex correction. Now we're expecting a stop hunt. This is actually a wick-off schematic. So first of all, I've marked out my levels from the smaller time frame on the 1 hour back here in 18th of March 2019. A stop hunt of this level would be brilliant. Hey Bruno, thank you, appreciate it. So I'm expecting, let's zoom in onto the 4 hour time frame. This is a level of interest, this zone that I've marked out on pound yen. This pattern is, yeah, there's been a bit of a stop hunt. So really I'm expecting a rejection of this level. For shorts, and the shorts will be a long-term trade to at least the outer structure of the pattern. Obviously I'm not holding it that long-term. I'll be banking at most likely take profit one, which for me would be somewhere here. But this would just be, I will only hold this trade if I've got 20% running and I don't have to worry about, you know, hence why holding long-term trades for me personally only works when I've got 20% running on the table. I can never do that with 100% if I'm honest. But this would be a pretty decent trade if we get some sort of a correction. I do like structure. There is an expanding formation. There's not too many buyers. There's buyers and sellers. So this is a large compression pattern on the 1 hour time frame. This is looking interesting. You need to see when price approaches a point of interest level, you need to see multiple manipulation schematics. So for example, this trend line here, many traders will be selling it, right? There's a wedge. However, what I'm expecting now is a close back inside the trend line because it looks like a trap. The reason it looks like a trap is because there's further confluences above here. So this pattern here, traders are obviously going to be selling it on the breakout with a stop loss above there and take profit, most likely, let's just say, back down to this level here or even further south. But because we've got so many confluences here, it's likely for it to rally to the upside. So for now, I'm staying put. I don't trust this breakout. If, however, there was 2-3 strong bearish candles following the break of this pattern, then yes, I'll be looking for some sort of a small correction, and then I'll be getting involved for a continuation pattern. But because price broke out the pattern with just one candle, and the next candle was indecisive doji, now the next candle is a bullish engulfing, it doesn't look too convincing. It will be a bit risky for me trying to get involved, so this is not looking interesting. In fact, I'm going to update the pattern. Always update your patterns. So now I'm expecting a rally to this level. Now because this supply level was very significant, I'll be looking at price action around there. So depending on how either the 15-minute approaches this level, I can definitely get involved early. Look for the same schematics I'm always looking at, then I'll be looking to get involved on a high risk reward entry trade. But again, that'll be one scenario. If it's still approaching in a impulsive bullish manner, then I'll be looking for the same schematic but on the outer structure for a higher probability trade. So again, I'm being very conscious about this outer structure here. This really would be the ideal scenario. One tap, two tap, and a third tap. The larger structure on a daily. This daily trend line will be a third tap as well, which is in confluence with the supply level. So this will be a very ideal scenario. But again, I'm prepared that, you know, price could go earlier, and if it goes earlier, it's fine. I'll get involved here or I'll get involved on a break of structure. So pound yen is looking pretty interesting, similar to GBP USD, but again, I need to be patient and actually wait for the trade. So most likely a stop hunt around this level here and then a strong decline. So this is my forecast for GBP JPY. And there you have it, guys. Hope you guys enjoyed today's live stream, and I'll keep you guys updated for tomorrow's breakdown and any updates on any trades that I've taken. So I hope you guys enjoyed it. I'll see you guys next time. Bye bye. Take care.